Viewers, and welcome to the channel. This week's video we will be discussing the AusNet situation. Title here is "With Brookfield and exclusive due diligence and APA Group in the wings, are we on the cusp of a bidding war for AusNet?" Code AST. Just a little bit of a chart here since the beginning of 2020 of both AusNet and Spark Infrastructure, which is a similar business, although different in that Spark is effectively a holding company for the sort of assets that AusNet holds, and both now attracting takeover interest in the last few months in an environment of continuing low interest rates. And obviously the attraction of the stability of these sort of cash flows, is obviously very appealing to some of those long-term investors out there, like pension funds and long-term kind of private equity investors as well. So, it's an unusual position we find ourselves in with this one, because the AusNet revelation that Brookfield had made a proposal for $2.50 per unit, or rather per share, sorry, and then they would allow exclusive due diligence for a period of 2 months for them to be able to firm up that proposal with a binding scheme implementation agreement. Meant that where the stock was about 235 when it came out, there was a pretty good feeling that, well, if this deal firms up, we'll be able to get in probably a little bit higher, but with pretty high certainty that this deal will complete at 250. The board clearly was receptive. Only issue, of course, was it didn't still have the response from the major shareholders, which is Singapore Power and State Grid. Although the speculation is that Brookfield has done its work and at least had some preliminary discussions with both of those parties, and the initial feedback is positive. So that was where we were, and then the day after we got this announcement that APA, who had actually been in discussions with AusNet for a period of time, had actually proposed what was a superior offer of $2.60 per share, made up of cash and shares. And obviously the APA group, very frustrated that they've been locked out of due diligence while Brookfield has this exclusive period. But obviously, once that due diligence period is over, there's no, and assuming how this negotiation goes with AusNet and Brookfield, there may be an opportunity for them to conduct their own due diligence after that period, which may be frustrating, but of course is still at least something, and means that they remain in the game. Considering where we saw share price and this AusNet price here, which doesn't actually show. There was a significant bounce on the APA news, and then a little bit of a sell-off the day after that. Because obviously the view is that now that we've got two, parties with pretty deep pockets, we could see a bidding war here. Now, that's the one thing I'll say about this is while it's a really high quality asset, and like Spark Infrastructure, not surprising to me that there's demand for these sort of assets, and to privatize these. They are pretty fully priced offers. In the end, you're not going to be able to buy high quality, predictable cash flow assets like these on the cheap in this sort of environment. So they are paying high prices, at least in comparable transactions. The two offers that are on the table are both ahead of Spark's offer. Understandably, of course, because they come with controlling stakes in their assets, but shows that there's some pretty full prices being paid. So it's not the sort of thing where strategically they have value to the bidders. We're talking perhaps APA. There's some strategic value, and that they'd see some synergies in joining forces. But for Brookfield, this is just an investment, and I don't think they're going to pay any price to get their asset here. I think they're going to remain firm with their price, and they want to get what they perceive as value, and that will of course all be relative to this. And this is the all important thing about whether we see higher prices here. What's the view of this? Is just US 10 and 30-year government year bond yields, and you'll see, as the pandemic has hit, we've seen these both drop significantly down to all-time lows. Even with the recovery, as the pandemic has started to come in the rearview mirror, we've kind of hit this period of more weakness as the outlook for growth has kind of weakened as Delta's taken hold, and maybe the picture of what this post-pandemic world is going to look like is not as bullish or inflation inducing as maybe what was perceived. But the simple fact is that if either Brookfield or APA sees this as consistently going to remain low, then arguably they can justify paying a higher price. So the rules at Rifkin is that we only buy into these sort of situations once there's a binding deal on the table. At this point, with due diligence, there's always the opportunity that either or both parties could walk away. We've seen 2 bids for companies in Iris Group and Hansen Technologies both fall over at the due diligence stage. So as much as I would like to buy, thinking that it's highly likely these deals will be done, the rules remain set in place, and we're only going to buy them once we've got a binding deal on the table. Anyway, if you like this video, please click like and subscribe. Thank you very much for tuning in, and I will be back to you with a new video next week.